today, the Indian equity benchmark snapped their 3-day record-breaking streak as investors finally managed to book some profit at record highs ahead of the weekly expiry of the index futures as well and option contracts. Now, earlier in the day, what had happened was that the benchmark opened higher, wherein Sensex rose to as much as 366 points. It again hit the 57,000 mark over there, 918 almost there. And Nifty 50 index also touched an all-time high of going over 17,000. So what exactly is happening in this space? Now, the backdrop to the story is that during the pandemic, a lot of first-time investors in the stock market have come in. A lot of women have come in. Demat accounts have been at a record high as well. So people are directly putting in their money. But everybody very nervously looking at this massive bull run. To talk about this, we've got experts now joining us on the program. Dhirendra Kumar, founder CEO of Value Research, is with us, and Amrish Baliga as well, stock market expert and investor. Now, Dhirendra, Amrish, thank you so much for your time. Now, the outlook on the discussion that we are going to have is very, very local. First-time investors who are looking very nervously, at the stock market right now on what should we do. And the question on everybody's mind is, when is the best time to book profits? Has it come? Do you need to wait? If you book, then what is your strategy ahead? Why don't we take a go at that first? Dhirendra, we'll begin with you.
Yeah, one is that, first-time investors who have just drifted into the market simply attracted by, it is exciting times and you're hearing that your neighbors are making money, your friends are making money. And that is clearly visible in the Demat account or the state of the market, the IPO, the NFOs, the new funds. Surprisingly, a record amount of money flowing into them. If you have made some money, you didn't have a plan, feel happy about it, take your money out. I think, market is a very serious business. And I think you should have a plan. And if you don't have a plan, better to plan it now. And the basic planning which any individual should do is that this is your money for the long run, which means you don't need this money for at least a couple of years, at least 5 years. And you are not missing this opportunity. Markets will remain mad. Be little gradual with your equity investment, because it is far easier to make all the mistakes or catch a market high only when it is at a high. You can't really make those big mistakes when the markets are in the doldrums,
So hold on over there, because you've said a couple of things.
Have time on your side and
be gradual. Just hold on, because you've said a couple of things. First, you said take your money and, sit out if you're new to the market and you don't understand how the fundamentals work here. And second, you said markets will remain mad. Now, to everybody watching right now, this is not an advice that we are giving at all. This is just what experts are saying at this point. So please apply your own brains and go back and visit your own financial advisors on this as well. But Amrish, do you agree with that?
I do agree to a large extent, but what I would say is, I think most of these people have made money. I mean, if you have invested in the last 15, 17 months...
Everybody's made money right now. Whoever entered the market at whatever front has managed to make a lot of money. I'm not sure if they know why.
Exactly. So, I mean, when you don't know the depth of the market, you don't understand the fundamentals too well, but you have made money in the market, I would say take some profits home. Book some profits. You cannot be exiting markets 100%, but at least take out some capital. If you are invested 100 rupees, just take out at least 30, 40 rupees out of the market. Don't be fully invested at this point of time. I think the mistake most of the people are doing is they made money in the market, they've invested that money back into the market, and at the same time they have withdrawn from fixed deposits, they've withdrawn from all their bonds and invested in the market. But the markets cannot go up one way. I mean, history has always shown us that the markets do correct. And when they correct, it can be a very deep correction. So even if the market say corrects 30%, although we say you should hold on for long term, but these are new investors. And once they see that 30% crack, they will start panicking. Why 30%? Even if they see 15, 20% crack, they will start panicking. So the best strategy at this point of time for these new investors is to at least take some profits home.
Okay, take some profits home. But Dhirendra, then what to do? Like, what, pay taxes on this then? Like, what are you suggesting these people who are now wondering, well, and if it's supposed to go further on, just explain some fundamentals to these first-time investors on if they are taking out their capital, you know, stay put with all the profits you've made so far. But if you are taking it out, what are the best other avenues? And also, when you ask people to think long-term, could you explain some fundamentals on how you should really approach this?
Yeah, when I think, one is the clear definition of long term, that, your money should not be needed in the next 5 years. Because most of the mistakes are made only when you have invested your money and the market goes down and you need your money, and then you actually panic. You have all the variables which will force you to panic. So that is one. Having an environment, having a context which is conducive to investment in equity. That's one. Equity investment should always be gradual, because it's for the specialist investor, who are investing in few companies. They know it well. They are valuing the intrinsic worth of a company, and they think, and they are willing to take that bet. Most investors don't. So your investors have only two things in their control. They can be gradual about it, and they can diversify. And if you don't diversify, if you are not gradual about it, you are lucky today that you have made money. And today you can book profit simply because you are sitting on profit, but you don't know why. And it will be a misfortune, if market corrects, goes down by 20-25%, and you will suddenly realize that, okay, all your profit has vaporized.
Right. So
that is why I'm saying that make a plan. If you have accidentally drifted to the market, take your money out, make a plan, get back to it in a methodical way for the long term.
Yeah, and educate yourself on this front as well. I'm afraid that's all the time we have on this segment right now. Thank you both, gentlemen, and good luck at the markets as well to you and to everybody else watching as well.